mean, I think the inflation debate divides everybody at the moment, and within DB research, we're no different. There are some people who don't think inflation is a big issue, and there's a few of us who think it is a big issue. So we just want to raise the debate and get some kind of intellectual diversity about it. I think for those that do believe in inflation, we think the economic orthodoxy is changing. And in the note, we talk about the big contrast between 40 years ago when, Volcker was just put in place at the Fed to combat inflation, and everything was very, very tight on the monetary side. And at the same time, Reagan was elected with a mandate to reduce big government. And if you look 40 years on today, we've got a Biden administration who is putting government at the heart of the economy and rebuilding the economy, so masses of fiscal spending. And you've got a Fed that has just embraced average inflation targeting and now wants to see, actual gains in employment and wants to see inflation go a little bit above target rather than kind of lean against it. So, this orthodoxy, I think, is changing. And it has changed since the financial crisis as well. If you go back a decade ago after the financial crisis, we very quickly hit the sovereign crisis in peripheral Europe and the Greek default. Reinhardt and Rogoff wrote the seminal work on how much debt you could survive with as a government. And that scared every government. And we had a decade of fiscal austerity. Now, I think that austerity, there was cracks appearing in it before the pandemic, but the pandemic has kind of blown it out of the water. And now we have far, far more higher levels of debt than we had when the sovereign crisis was ongoing. And yet no serious commentator is talking about default risk as a possibility. And, governments around the world are saying we can spend more, we can give the population a bit more of what they want. And at the same time, the central banks seem to be supporting that. So we think the economic orthodoxy is changing, and that's the reason inflation will be higher in our view.
It's really interesting to hear you emphasize the central role government is taking here, and how policy is changing, and how government is really at the center of this potential inflation comeback. If we do see inflation return in full force, what does that mean for government's new policy goals like climate change and other sort of social norms that they've put at the center of their policy now?
Yeah, well, I think the move to put social policy at the centre is extremely admirable and shouldn't be criticised. That's the one thing you would say. But I suppose the risk would be that if you did see inflation, it might make macroeconomic policy much more challenging. And if central banks did raise rates aggressively, it might reduce the ability to address all these social issues. So I think as a minimum, policy making is about to get a lot more challenging if you get inflation.
I had a look through your report, and there's one chart in particular that stood out to me. It's a chart that a lot of the crypto community like to circulate, and that is the one of money supply. I believe it's figure 4 in your report for anyone who's watching this. And it does show that money supply has seen an explosive growth over the last couple of years as a response to the pandemic. And even if you compare that to 2008 doesn't even register on the scale of how much money supply has actually been created just in the last 12 months. But isn't it also true that in order for this extra money supply to be inflationary, you would need the velocity of money to pick up as well? So what is going to be the catalyst for this extra money supply to actually become inflationary? So far, there's been very little correlation between extra money supply and core inflation.
Yeah, well, I mean, I think if you look at, the chart you're referring to, if you look at it over a very long period of time, money supply growth and nominal GDP are very, very correlated. Now, if you try to break it down year by year, over the short term, it doesn't look as correlated. And I suppose when you've seen a spike, the likes of which we've seen during the pandemic, it's hard to think that some of it won't go into the economy. But I suppose the real inflationary spark here is probably what consumers do with their savings. Look, if consumers massively save all their excess savings and keep it as savings, then there's probably less inflationary impulse. But if consumers spend, a reasonable proportion of this, then it can filter into the economy very, very quickly. So I suppose why this isn't why it's a science. This is a bit of an art form in many respects, because there are so many uncertainties about what the consumer will do now. For those on the inflationary side, we think the consumer will spend, and we think there is a lot of pent-up demand, and a lot of that excess forced savings out there will make it through into the economy. So, look, I mean, in the last decade or so, you haven't had much inflation, even though you've had a lot of money printing, because a lot of the money printing hasn't ended up in the real economy. I think that's where this time might be different. That a lot of the excess savings will end up in the real economy, in our opinion.